furniture, one for computer, one for mouse, one for plant, one for machinery, one for building, one for land. So the best option is to have one separate GL for each of these, a separate GL for each of these. Because at any given point of time, if I want to know what is my total value of a land, I just go into that particular reconciliation account and figure out. If at all these are there in one GL, it will take a long time for me to segregate and find out the value of a particular asset group. So basically we will have one reconciliation. Now the important thing is whatever the assets we are creating, those are called asset numbers, and all these assets will be linked to one reconciliation GL. That is what we will mention here in the account determination. So the account determination, when you are procuring, when you are selling, or when you are providing depreciation, when you are transferring, what GL that it has to hit, that is what the account determination talks about. This account determination is based on the asset category. It means asset group. I'll just show you that part. Okay. Now here assign GL accounts. If you see over here, of course, we have only one chart of accounts. That's fine. And account determination, you see, account determination, these are all different asset classes. We will discuss what is this account determination and what is how it is linked to asset class with the screen layout, those things. These are all these are also known as asset classes. And once you pick up any asset class and you can see the GL accounts, what GL to be considered in the case of down payments, what is the GL account that it has to consider at the time of procurement, and what is the GL it has to consider in the case of depreciation. All these things will be maintained over here. This is called account determination. Okay, so the important point is first is asset class, the next one is the account determination. Any questions? Yeah, the next we have one more we have is depreciation areas. Okay, what are these depreciation areas? Okay, now we have an organization, we have a manufacturing plant in the US. Now we want to see we are preparing our financial statements to meet different requirements. One may be with international accounting standards, one may be with IFRS, one may be with US GAAP, or one may be with something else. It means we have four processes. We have four sequences. And now in the case of I have a computer asset. Now in the case of international accounting standards, let's say I have an asset called computer, and I have international accounting standards, I have IFRS, I have GAAP, and I have something else. I have one more, some XYZ. Now, according to these, the computer, in the case of accounting standards, international accounting standards, the rate of depreciation going to be 10%. But as per IFRS, it has to be 12%. And as per GAAP, it has to be 15%. And as per XYZ, let's say it is 9%. There are different rates. Maybe method is different. We have different methods. Primarily, we can use fixed fixed installment method, or we call it as, there is another term called straight line method. The method we call it as straight line method, and diminishing balance method. There are different methods in the case of depreciations. If I say straight line method, now I have 1 lakh of asset with 10 years of 10%. What does it mean? It means it will be calculated 10% each year. So that's going to be 10,000 every year for 10 years, right? For 10 years, this is going to be the same. So every year it will be 10,000. But when I say 10% diminishing, in the sense, in the first year on 1 lakh, 10% will be 10,000. After 1 lakh, subtract one first year depreciation, what will be the amount? 90,000. On 90,000, we will be calculating 10%, 9,000. So 1 lakh minus 10,000 minus 9,000. It is going to be 81,000. On 81,000, 10%, that is nothing but 8100. It means the amount of depreciation will be diminishing here. This is what we call it as diminishing balance method. Okay, so the whatever the method may be, but if there is a different perspective in calculating the amount according to these principles, then we need to have those many depreciation areas. So depreciation area is nothing but calculating the depreciation as per certain principle. It takes care of the depreciation calculation procedure, the depreciation area. So under chart of depreciation, we may have multiple depreciation areas. We may have multiple depreciation areas. Any questions? Okay. The next we have, the other term we have is depreciation, depreciation key. This is the most important configuration in the entire fixed asset. In the entire fixed asset, the depreciation key is the key. Depreciation key is the key concept. Now, what does it take care of? The depreciation key. Depreciation key takes care of the method of depreciation, and also it, it considers the method of depreciation and the rate of depreciation. Basically, it takes care of two things. What is the method of depreciation that you're following? We have different methods. I've just explained about two things, a straight line method and diminishing balance method. We have multiple methods. There are about 10 methods in depreciation. Okay, so now which method are we using and what is the rate of depreciation? These two properties are there within this depreciation key. Okay, these two are there within the depreciation key. Again, in depreciation key, we can see multiple, multiple steps, multiple points that are to be considered in the depreciation key that we will see slowly. Okay, so on the whole, this is what are the important terms of the depreciation. Any questions? Important terms in the fixed assets. Okay. Now let us discuss about the asset, fixed asset, organization structure.
Hey, Nanda,
Yes.
the depreciation key you are talking about.
Mm-hmm.
Who make decision as per depreciation key when you are assigning to fixed asset? Is it the company that makes the decision or who makes decision?
No, it's the decision of the business. What is the rate that they want to consider? What is the method that they want to consider? The whole thing will be of the business. We are
So,
just we are picking up the information. Based on that we will be creating the depreciation case. That's it.
okay, let's assume that an asset has been going for an asset has depreciated for 3 months, okay,
Mm-hmm.
and within out of 1 year, asset has been depreciated for 3 months. So we have 9 months left. In the
Mm-hmm.
9 months left, and they said they would like to configure another depreciation key. They want to do away with the one that is charged for 3 months. Why are they always asking for such in the middle of depreciation?
No, sorry, I could not get your point
What
clear.
I'm saying is
So
let's
three
assume
months,
that we have an asset to be
Mhm.
depreciated for 12 months.
12 months, right?